Happy Monday, everybody. I hope you had a great weekend. Today is December 9th, 2024, and this is your Monday Market Update. As we do each week this time, let's review last week and preview this coming week ahead. Monday, as the week kicked off, the country was still on the hangover from Turkey, football, Black Friday sales, and in the throes of Cyber Monday. Market did not pay much attention to all of that. Political headlines created some early market volatility. President-elect Trump his trade threats to the BRIC countries and the new controversial appointments weighed slightly on sentiment. Add in the pardon of Hunter Biden by the current president, and those headlines took up most of the air of the room. The ISM manufacturing PMI came in better than expected, signaling continued soft landing momentum for the economy. Prices also declined, easing inflationary concerns and boosting hopes for a rate cut in December. More Goldilocks data. Much was to come in the week, so we'll see what happens with that. As we got going into December, the S&P is on track to post another annual gain of at least 20%. Still some time left, but it looks that way. This, on top of the 24% gain last year, will make it only the third time this century when the S&P put in back-to-back years like this. By the end of the day, the Dow was down a third of 1%. S&P hit a 54th record of the year and closed up a quarter of 1%, and the NASDAQ was up 1%. Cyber Monday and online Black Friday sales showing increases of close to 8% from the same time last year, while brick and mortar was down about a third of 1%. We pretty much all knew that. Tuesday brought political news, not here, but overseas, with South Korean president declaring martial law, which briefly triggered the risk-off trade. The Korean parliament's move to block the declaration calmed markets a little bit mid-session. Tuesday also brought some new action with China as they banned rare mineral exports to the United States. This is in response to our move to ban chip sales. Both will make a splash, but I also think that both China with chips and the U.S. with rare minerals, other sources are already being worked on. This is just not so much news. JOLTS data was higher than expected. Layoffs dropped sharply and the quits rate rose, also reflecting labor market resilience despite broader cooling trends. Technology and communication sectors led gains again, with cloud-focused companies leading the charge. The Dow closed up about a quarter of 1%, S&P up just slightly, but another record to close, and the NASDAQ up about a half of 1%. Wednesday did had the market gap higher on the open and surged to new highs as optimism from tech earnings combined with softer economics data. The ISM services PMI fell slightly, indicating slowing activity, but reinforcing the case for a December rate cut. It is still over 50%, over 50. That's in expansion territory. The ADP employment report showed weaker private payroll growth, contributing to lower Treasury yields. Again, slowing but steady growth. Remember, as long as we don't fall off the growth cliff, we're going to be okay. Most importantly on the day for the markets, the Fed Chair Powell's comments provided no surprises, with continued focus on balancing economic growth and monetary policy easing. This left the door open for a cut in December. The Dow and the S&P closed up about 2/3 of 1% each, and the NASDAQ up about 1.25%. Thursday had markets open a bit flat on the open. Modest uptick in jobless claims was welcome as it alleviated hawkish concerns. A Fitch rating report on the United States economy flagged inflationary risk tied to tariff threats and labor supply constraints, sparking some afternoon selling. To get the idea, 6 sectors were down, 5 were up, but only 3 moved more than 1%. So just a little bit of digestion in the market. The Dow was down about a half of 1%, S&P was down about a quarter of 1%, and the NASDAQ was down about a quarter of 1% also. The all-important Friday jobs report for November came in and beat expectations, adding slightly more jobs than expected and revising October up. Unemployment rate did tick up to 4.2%, so as far as the market was concerned, that was good. The markets opened higher on the day. Fed funds futures now show an 85% chance of a rate cut in December. Not to be forgotten, the University of Michigan survey had sentiment up at the highest level since the summer. We can all tell that. And along with that, the inflation expectations for 1 year up at the highest reading since July. Oh, yeah, but that's being ignored. There's no question about that. Some Fed chatter had comments about expecting slower rate cuts in the cycle, but that did not get in the way. According to some, the market seems tired. 23 new highs in the S&P and 5 new lows for individual stocks. But as I mentioned last week, you have everything from big moves up to big moves down being forecast. By the end of the day, the Dow was down on the day, down a quarter of 1%. S&P closed at yet another closing high, up a quarter of 1%. The NASDAQ closed up over 3/4 of 1%. For the week of December, for the first week of December, the Dow was down a half of 1%, S&P up 1%, and the NASDAQ up 3.33%. This week looks like a big one for news, but I will say, excuse me, it'll be hard to break this momentum in the short term. I would not be surprised to see this market run hot into the end of the year, just my opinion, but we do need to watch out when we flip the calendars into the new year. Valuations continue to be at the high end of historic levels, but be clear, valuations are very bad market timing mechanisms. Let's sum up this coming week. CPI, consumer prices Wednesday, PPI, producer prices Thursday. Those are your big ones. We'll see what that says for inflation. I'll be watching for the small business optimism survey on Tuesday. That's always telling. We'll also get a few big earnings from Oracle and Costco, to name a few. High frequency jobs numbers too. No Fed heads, as they are in the blackout period ahead of their meeting next week. Watch for Goldman or the Wall Street Journal on this. They seem to have the information on what will happen. It just seems that way, that they'll talk about that before the meeting. Check back on Friday for the year-end planning ideas. Until then, have a great week.